Well, on that note, let's get in our experts for today. Well, we have Nilesh Jain. He's the head AVP of Technical and Derivatives who joins us on the show right now from Centrum Broking. Nilesh, good morning and thanks for taking the time out. Nilesh, it does seem like, and what the implied open is indicating, a sharp up move, at least in open. Under those circumstances, and given the fact that we have seen a little bit of a pause in markets over the past couple of sessions, do you think that it could potentially warrant a sharp bout of short covering in the first 1 hour of trade?
Morning, Agam. So if you look at the overall structure in last 6 to 8 consecutive sessions, we have seen a gradual decline. In last 2 sessions, we have seen an attempt has been made to recover from the lower levels. But the point here is that we have seen a continuous call writing at 23,300, 23,400, 23,500 strike. With multiple strikes, we have seen call writers are still active. And today, post gap up opening, I think there will be a short covering move. And today being a weekly FN expiry for the Nifty, I think the Nifty should sustain about 23,300 from expiry point of view and move towards 23,400, 23,450. So that's the intraday levels, and going forward, I think Nifty should make an attempt to test its 21 DMA, which is placed at 23,700. So we have from the highs, we have constantly witnessed a lower top and lower bottom formation. Lower bottom has already been made. I think Nifty will make an attempt to make a lower top, which may extend towards 23,700 to 23,800. So these are the levels we are eyeing on the upside. The weeks have also cooled off in last 2 sessions. A further drop from here will definitely help the index to pull on the higher side. And we have a major event of budget. So ahead of that, we expect market to remain extremely volatile, and one should not get carried away with the kind of optimism that we are witnessing. The index are not yet out of the woods, and we may see another round of selling once Nifty reaches the resistance zone of 23,800 to 24,000.
Okay. All right. So caution is advocated by Nilesh. Nilesh, in that context, what is the advice that you have in terms of the picks that you've selected for today?
Right. So we are, as of now, focusing on stock-specific action. As far as sectors are concerned, the chemical space is looking attractive given the kind of run-up that we have seen from the lower levels. So across all chemical stocks, we have witnessed a strong pullback. Navin Fluorine is something that is on our radar, and this particular counter has given a good rebound from the lower levels. Looks like it is forming a kind of flag and pole pattern breakout, and the stock it looks attractive for the levels of 3,800 to 3,850. Stop loss can be placed below 3,620. Within banking space, small banks like Federal Bank, this particular stock is looking attractive, and we are expecting a pullback towards 201. One can keep a stop loss below 190, and Federal Bank can also be bought. And apart from that, CDSL is something that is looking attractive given the kind of fall that we have seen in this particular counter. We are expecting a retracement towards 1,750 to 1,800. So CDSL, from a risk and reward point of view, looks attractive, can be added at current levels. One can keep a stop loss below 1575, and upside target would be 1650 to 1700.
So those are the calls from the chemical space, Navin Fluorine, and keep an eye on CDSL as well.